Most small business owners think you need perfect credit, a ton of collateral, or even putting your own personal house on the line just to get a business loan. But that's not true. The SBA 7A loan was created to help small businesses grow, and in 2025, it's still one of the most flexible financing tools out there. Hey everybody, my name is wware, also known as the Florida Mortgage Caddy, and I help business owners and investors understand their financing options so they can grow with confidence. In this video, I'm going to break down SBA 7A loans in plain English, what it is, how it works, and how you can qualify for one. And by the end, you'll know whether this program could be the right fit for your business. So what is an SBA 7A loan? Well, an SBA 7A loan is a government-backed loan. That doesn't mean the government's lending you the money directly. Instead, the SBA guarantees part of the loan to the lender. So if you default, the SBA covers a portion of that loss. Why does that matter? Because it reduces the risks for banks and lenders, which makes them more willing to approve small business owners who may not qualify for traditional financing. Think of it like having a cosigner. The SBA is standing behind you, which gives lenders the extra confidence they need to say yes to giving you the loan. With an SBA 7A loan, you can borrow up to $5 million. Now, most small businesses don't need anywhere close to that, but the flexibility is there. For loan terms, if you're financing working capital or equipment, repayment terms usually run up to about 10 years. If you're financing real estate for your business, like buying a warehouse or an office building, terms can stretch as long as 25 years. And that's huge because spreading your payments out over 25 years makes them way more manageable. Imagine financing a $1 million property over 10 years versus 25 years. Your monthly payment could be literally cut in half. So, who qualifies for an SBA 7A loan? Well, here's the good news. You don't have to be a giant corporation to qualify. In fact, the SBA's definition of a small business is pretty generous, and most companies in the US qualify under their size standards. So what do lenders look for? For your credit score, they're typically looking at you to be in the mid-600s, so you don't need an 800 FICO score, but showing that you're responsible with credit goes a long way. Then they look at your ability to repay. Lenders want to see that your business is generating enough income to cover the expenses plus the new loan payment. They'll look at your tax returns, profit and loss statements, and bank statements to confirm. And last, they're going to look at your experience and stability. If you're starting fresh, lenders like to see that you've got industry experience or a very strong business plan. A common myth is that you need huge profits already, but the truth is what matters more is steady cash flow and a clear plan for how the loan helps you grow. How can you use an SBA 7A loan? Well, the SBA 7A loan is incredibly versatile. You can use it for working capital to smooth out your cash flows, refinancing your high-interest business debt, buying new or used equipment, purchasing real estate like an office building, storefront, warehouse, etc., and even funding for business acquisitions. So if you're looking to expand operations, upgrade your equipment, or take your business to the next level, this loan can cover a wide range of needs instead of forcing you into a narrow box. So let's look at an example here. One of my clients that we'll refer to as Sarah owned a small cafe. Well, Sarah's shop was doing very well and she wanted to expand to a second location across town. However, like most small business owners, she didn't have $300,000 sitting around to cover the build out, the equipment, and the staff. Through an SBA 7A loan, she was able to put just 10% down, and the loan covered the construction costs, the new equipment, and even the payroll to get her staff trained before they opened. Then the first year, that second location doubled her revenue and created countless jobs in her community. That's the power of this loan, as it allows business owners like Sarah to grow without draining their personal savings or taking on crushing short-term debt. Okay, so now a quick word of caution. The most common mistake I see is business owners just assuming that they're not going to qualify and never even applying. Others walk into a bank without a business plan or the other documents that they need in order. So if you prepare with clean financials, a clear plan for the money, and realistic projections, your chances of approval skyrocket. So if you're considering expansion or need extra capital, don't dismiss the SBA 7A loan. Take a hard look at your financials, pull together your documents, and build a simple plan that explains what you'll use the funds for. Even if you don't qualify today, you'll know exactly what areas to improve in so that you can apply successfully in the future. Drop your questions in the comments and I'll answer them directly in future videos. And if you want to see if you qualify for an SBA loan, my info is in the description. Don't let financing hold you back from growing your business. Subscribe to the channel for more breakdowns on business and real estate financing, and hit that like button if this video helped you.